We'll go ahead and just get the ball rolling. I want to thank everyone for joining us today. My name is Dan Reed with Score Maine, and today we are doing a presentation on bank loan business application tips. And I want to thank Nate Henry from Bangor Savings Bank for joining us today to talk about this topic. And SCORE is a resource partner of the SBA, where we are funded in part by the SBA, but we are also funded by local institutions here that allow us to put on these webinars. And I want to say thank you to the Maine Technology Institute for being one of our major sponsors for our webinars. And with that, I want to turn it over to Nate, who is our expert on bank loans today. Thank you very much, Nate, for presenting on this topic.
Yeah, thank you. Thank you all for being here and taking some time out of your week to come and learn a little bit. This is the space that I work in 24/7. So if I'm saying anything that isn't making sense, please don't hesitate to stop me and ask questions. It's a smaller group today, so I think discussion format, questions, I really want to make sure that I'm adding value to all of your days. With that, I will work on sharing my screen here so we can open up the presentation. Everybody see the presentation okay? Okay, perfect.
Yeah.
Okay, great. So
it's showing the presenter mode right now rather than a full screen.
Okay. See what I can. I don't really have any notes, so I guess that's not the biggest issue, but let me try this. Is that working?
Perfect.
Okay, great, guys. So as Dan said, my name is Nate Henry. I work as a small business commercial lender at Bangor Savings Bank. But a little bit of background. So before getting into banking, I worked at my family's business. So I'm from the Bangor area originally. So I'm not sure if any of you are up from there. But yeah, was familiar with SCORE in that area and working in entrepreneurship, and wanted to then donate some time and dedicate my career to helping other people start businesses. So a little bit about me, but we can get started here. So, a lot of the times when people are coming to me and sitting down, they have a project all hashed out there. They have everything ready to go. They're really looking for cash for a loan and looking to turn that around pretty quickly. And what I'm going to talk to you about today is how that necessarily isn't always the best path, and how building a relationship can actually help in the long run, even if you don't have all of the details rolled out. So I'll talk to you a little bit more about that today. So yeah, a little bit about the agenda. We're going to kind of talk about how a bank considers businesses startup versus an established business, some things to keep in mind when you're planning on meeting with a banker, and some questions to ask. So one of the big things that is specific in banking and not something that is necessarily common knowledge is, what is a startup business? What is an established business? Do banks lend to startups at all? And the questions that vary, but as a rule, most banks that do any form of SBA lending will indeed lend to a startup business. And a startup business isn't necessarily something that's strictly concept. It can be already in operations. It can be an established business, but if it has less than 2 years of tax returns, there isn't enough historical financial information to allow that business to be considered a non-startup. Some other things to keep in mind when considering whether your business may be a startup or may be considered established is, I've had people purchasing businesses that may be hundreds of years old. There was someone that was looking to purchase a campground that's been around since 1950s in Maine. So as a rule, they thought that, well, the business itself is established, but I'm not sure how many of you are thinking about starting a business or in business already. But one of the key things to keep in mind is your business is really you. The two most important factors in the success of a business is the team in place and the timing of starting your business. I think we can all probably list a lot of successful businesses that aren't reinventing the wheel. Their products may be basic or complementary products. And I think we could probably all think of some really great concept companies that are out there. But if you don't have the right team in place to bring it to the market, or you're starting a business, let's say in 2020, during a global pandemic, there are certain factors that are outside of your control that can really impact the success of your business. So that's something to keep in mind. The team and the timing are really, really important. So if any of you are interested in purchasing an established business, know that you're going to be asked questions on what your projected revenues will be based off of historicals, but as well as based under your leadership as the new business owner. If you have a business that has 2 years of tax returns and you're looking to do some sort of an expansion project or a second location, something to keep in mind is it's not just going to be the historical financials supporting the loan, but as well as what you're projecting to be bringing in for revenue. So SCORE is an organization that I partner with quite regularly with my clients and recommend them to meet with a SCORE mentor to develop a business plan, develop some projections to really help tell the story of what's going to be happening in your business. Something that may not necessarily be needed is, let's say there's a 5-year-old construction company needing to purchase a piece of equipment. The equipment's going to allow the business to function as it already is. The vehicle isn't going to necessarily change the mission or the focus of the business or generate significant new revenues. That's something that could be looked at as a more transactional loan, and not necessarily something that you would need to be bringing a business plan and projections for. But even an established business, if you're doing something new and innovative that you're going to be relying on projected income, starting with SCORE is a really great place to start. So one of the most important things in meeting with a banker or really anybody is really knowing your business. And meeting with a SCORE mentor, as you can see, is a great way to start in understanding your business beyond the day-to-day. A lot of what I do is meeting with business owners that have spent their career or spent their life working in the business. And, whether, let's say you're a restaurateur, that means you're at the restaurant, 5-7 days a week. Whether you're in the kitchen or manning the front of house or, wearing about 10 different hats, that's your life as a business owner. Contractor, you're, working on the properties, you're at the job site. And that's what I would consider working, what we would say working in your business is you are doing the day-to-day, you're an owner, an operator. There is an art to transitioning into being able to work on your business, and that is getting to get a better understanding of your financials, getting a strategic plan in place, whether that's fully written out or really just taking time to think through where do you want to be personally, where do you want your business to be in a 5 years, and what steps do you need to take place to reach that. So knowing your business is beyond just the day-to-day, but really where do you want to be going? What tools are in place to allow you to reach those goals, and what are the gaps that you need some support with? Your job isn't to know everything and be able to do everything in terms of a professional space of your business, but identifying the gaps and saying, okay, I really need to bring in a bookkeeper, or payroll is taking this much time out of my plate. I'm not staying up to date with the current legislation changes, so bringing in a payroll provider would be valuable. That's the piece of knowing your business, is knowing where you need support and knowing where you're okay. And again, SCORE website, SCORE mentors, they're going to be able to help you through that process, because a lot of SCORE mentors that I've gotten to partner with have owned businesses in the past. They've worked in their own business and have had to go through that experience of transitioning from I'm working in the business 24/7, can't look 2 weeks ahead, nonetheless 5 years, to, okay, what's my exit plan? How do I want to grow? My lease is up in 2 years. What's next? they'll be able to help navigate that conversation with you. Another thing to keep in mind is, understanding your ask. But I will say this slide isn't necessarily a necessary. So one thing in banking on the commercial or business side, and those terms are used interchangeably. So if you hear commercial lending or commercial banking, that doesn't necessarily just involve real estate. That means small business as well. So those terms can be used interchangeably in our world. So on the commercial lending side or the business lending side, one thing that's quite different than on the personal lending side is when it comes to personal lending, if you've ever applied for an auto loan or a personal mortgage, things are pretty black and white. You provide your tax return, your income, your debts, and it either works or it doesn't work. There's not a ton of flexibility. In business lending, as we already talked about, the two most important factors is the team and the timing. Then your business model and plan, past financials, that's when those things start to come into play. There's 100 restaurants in Portland, they're all managed and run differently. So how are those business owners differentiating themselves beyond just what the product is, but in their service, in their model, how are they retaining staff? Those are all factors that come into play on the business side. Because when you're successful as a business owner, the bank is going to be successful. So, no bank is ever going to want to set you up to fail. And no, if they're saying, pump the brakes, a lot of the times it's because they have a concern that, should at least be on your radar. I'm not saying there's times that there's declines that, the business then goes on and is successful, but it's definitely a good moment to take a pause and say, okay, what are they seeing? Am I seeing that same risk? And we have a different view on it? Or was this something that wasn't even on my radar? So being able to understand that aspect of it, that no one wants to set you up to fail. If we feel good about the project, that means that, we took into account the risk and feel like it's a good thing to continue to partner with you on. I've unfortunately had to have hard conversations with individuals, but I've also had, a lot of more positive conversations of people coming up, hugging me, they open their business. And that's not just because I said yes to everything that they had when they first came to me. It was a lot of back and forth, a lot of working together, but they understand why there was some pushback. They understand why they had to tweak their business model. And we're excited at the end of the tunnel because of that. And that's something that, working with a SCORE mentor can assist you with as well. It's very common to have a business owner, SCORE mentor, myself as a banker, all on a Zoom call, all meeting to really discuss, go back and forth, and figure out the best way to help you as the business owner be successful. So feeling like you have to do it on your own and spending hours searching Google and not knowing, reading article after article, I would say isn't the most efficient way, and you're going to have a lot of misinformation. A good banker, and there's plenty of good business owners, there's plenty of bankers, but someone they're going to want to take the time with you to help you feel comfortable in the conversation that you're having. They don't expect you to have everything figured out. And I want to walk you through that process because, I work in a space of commercial lending. This is the knowledge that I have. Every business owner I meet is an expert at a different thing that they're doing. I've met with people that are in cybersecurity that are in charge of working with Department of Defense contractors on protecting their data, protecting their information. I cannot keep up with I could barely figure out how to share my screen. So, if I worked at his company, I would have a pretty steep learning curve. But at the same time, it's easy for me to potentially use bank jargon that doesn't make sense. So, we're all just people. We want to help other people be successful in running their business. So don't feel like you have to have everything figured out. They're going to take the time and work through developing a list so you know what steps you need to take to get closer to a yes on the loan, get closer to opening your doors, get closer to expanding your business. And a SCORE mentor will do the same thing. And a lot of the times the bank will recommend working with a mentor as well, because per certain legislation, banks bankers can't advise customers. We can provide suggestions to partner with people or point out concerns that we have, but we are not formal business advisors. So that's why working with a business advisor, especially one that is free and accessible to you, makes a lot of sense. So that really it didn't really dictate word for word on the slides, but I'm assuming that you all could read through. But this is all a part about knowing your business, knowing what you're asking for. If you don't know fully what you're asking for, but you have a project in mind and need some help with the structure, don't spend till midnight on Google looking at loan term structures. Exactly what they need. Just pick up the phone or submit to the branch or set up a meeting and they'll work through that with you.
You broke up there a little bit, Nate. Can you repeat just that last part?
Yeah, of course. Thanks, Dan. So essentially, you're seeing this slide, knowing what you're asking for. If you have a project in mind, that's a good time to call your banker or a score mentor to work out sources and uses and understanding your ask. Don't spend 8 hours on Google trying to figure out what loan term or what loan type is the perfect for what you need and bringing that to your banker. Most of the meetings that people have done that, I feel bad because I may have a recommendation that's different from what they found online. And it's going to help them reach that goal a lot faster. They could have saved a lot of time by just picking up the phone and saying, this is the goal. I'm trying to build into this space or, cash flow. I need some cash flow support with payroll, or I have some equipment needs. And then, working with the banker to figure out what that fully looks like. And I'll talk a little bit about it at the end of the slideshow as well, but SBA loans is a big piece where there is a lot of confusion, I think, if people are doing their research online. I had someone call me again and again telling me that they needed an SBA loan, which usually provides some additional help for them if the bank has some concerns. And I kept telling them that, well, it would, we could do it cheaper and quicker without the SBA and the bank is comfortable. And the person was very, very adamant that what they found online was better and ended up going through the SBA loan process, which ended up costing them a little bit more money and taking some more time with a different institution. So building the relationship with your banker, building that trust and allowing and listening to their recommendation, I think is a really good goal. And a lot of the times you can bounce their recommendation off your score mentor and they can give you some feedback on that as well. If they feel like there's other options out there that make more sense, they can give you that feedback based off of what they've seen as well. So sources and uses, we'll move here. This is essentially what that table would look like. So cash being brought to the table from you as a business owner for a project. If there's different lenders out there, so sometimes the city of Portland has certain loan programs and certain grants available. So sometimes if the owner only has 10% of a project and the bank's looking for 20% down, the owner can bring 10%, the city can do a small loan of 10%, and then the bank does a loan of 80%. Your mentor and banker can help you work through this. I don't think I've ever had anyone come with this fully worked out, but we work through it together to try to understand the scope of the project. So if you hear sources and uses, this is what that looks like, as you can see. And this one was for obviously a pretty big project. I have sources and uses tables for project of 10 and 15,000. The owner bringing 3,000 down, they have a gift of 3,000. Equipment purchase is 10,000. And I know that didn't add up to 15,000, but this is all a part about knowing your business. As you can see, that's kind of the recurring conversation of this meeting is, let your banker know the loan terms, work with your mentor on that, figuring out loan structure as well as your banker. But if you can really understand where you want to see your business going and be able to answer questions on that, that's the most important thing. You don't need to, understanding to the best of your ability your financials, but making sure that you have some financials to provide is going to be really important. With any business lending, the 3 factors that come into consideration in this order, and we'll talk about all of those today, is really the bank's looking at forms of repayment for the loan. So the first thing is business cash flow. So if it's a startup business, that's when your business plan and projections. What do you anticipate for future revenues that are going to be available to pay back the loan? If it's not a startup, what historical financials do they support the request? And looking at that. So that's the first form of, being able to repay your loan, having a healthy business. The second form to make the bank whole on a loan would be collateral available. So there's a lot of businesses that struggle in the collateral section. If you guys look around downtown, I'm sitting in downtown Portland. I know SCORE does things statewide, so I don't know where you all are, but if you look around downtown Portland, there are a lot of restaurants with a lot of really expensive equipment that lease their space. As I told you, I am a lender. I am not a restaurateur. I definitely cannot sell light fixtures and paint and ovens. If the restaurateur wasn't able to sell their products, I definitely can't sell ingredients, and I couldn't make a meal as well as them. So that's not a space that the bank feels super secure on collateral. That being said, if you look around, there's a lot of restaurants open. So how do they get their financing? How do they get their support? So that's when the bank will look to do an SBA loan. So SBA loans, there's a lot of different types, and they all get thrown out interchangeably at times, especially online. The loans that I am referring to is called the SBA 7A and the SBA 7A Express. You don't need to feel like you need to be an expert on that. That's my job. But that's the type of loan that I'm referring to. And essentially what the SBA 7A loan program is it's not a loan that's done directly through the SBA. It's not something that the bank's just selling your potential loan away. If the bank is a preferred lender, 95% of the time, because I can't speak for all banks, but the bank will keep that loan on the books just like any other business loan. And the SBA 7A aspect of it works as a loan insurance. So the SBA wants to see businesses get started. If the cash flow looks strong on the business plan, the team, everything looks like it's in the right place. And the only weak part on the project is the lack of collateral, because they're putting, hundreds of thousands of dollars at times into a space that's leased. The SBA will say, well, we want to see this business get started because every other aspect of it looks strong. They're willing to take that risk and provide what they call their SBA guarantee. So they cover up a percentage of the loan amount if the business and the owners of the business were unable to repay. It's a way to help the bank continue to make deals, but also support smaller businesses that may not have, strength in every aspect of a commercial loan. So that's how we're able to finance those projects. Fortunately, the SBA has made that process a lot easier and shortened their forms, and as well as reduced fees. So you'll see different, if you're looking up trying to figure out what the interest rate on an SBA loan is or figuring out the fees, you should call your bank I would say first. And the reason is because the SBA isn't lending this money out directly. So an SBA loan with Bangor Savings Bank isn't the same as an SBA loan at you name the institution. The SBA rates and the SBA fees are within a certain parameter that they approve, but it's mostly dictated by the bank's regular lending procedures. So there's someone that I work with that they do high risk SBA deals, and they're not a traditional bank. And I was talking with someone that had met with them, and they were like, oh, so the average rate on an SBA loan is 15%. The fee is here. That was about double the rates that I was quoting on a similar product SBA loan. That being said, it's just we're working in a different space. We're not doing the same type of projects. So that person said like, oh, I would never do an SBA loan. The rates here, the fees here, it doesn't make sense for me to do. That's when coming to a bank and working with your SCORE mentor to figure out what the cost of an SBA loan is a lot more beneficial than trying to find it online. Because a lot of the times you may see something like that is off-putting and not necessarily the reality. So that touches on the collateral piece. We talked about the cash flow. And then the third piece is your personal guarantee, which we'll talk about for the rest of the slideshow. But yeah, being able to have a bookkeeper working with QuickBooks is a great tool to be able to help manage your profit and loss statement and balance sheet. I've directed many people to the SCORE website. They have webinars on how to, I think they have one for QuickBooks specifically, but they definitely have some tools and webinars that are recorded, as well as some templates to help you manage your profit and loss and balance sheet. Great. So this is the third piece. So I'll just kind of recap because all I've done is talk for 25 minutes straight. So I want to make sure that people are, understanding. So the three main factors for any sort of business loan: cash flow, collateral, and then personal guarantee. So understanding your personal guarantee, what does this mean? Any owner, it doesn't matter if it's small business, startup, established, large company, if it's not a nonprofit, and it's not a publicly traded company, any business loan that has an owner of 20% or more, that owner is expected to provide their personal guarantee. So what that means is if the business is unable to pay, the owners are going to work with their personal assets to be able to pay the loan. A misconception in this space is that banks are looking for someone with high net worth that can cover the full loan amount out of their checking account. That's not the case. Obviously, that would be great. They would be a great guarantor if they could do that. That's never happened since I've been a lender. So the bank's willing to work with people. Each bank has different risk tolerances, and you'll notice that. But as we talked about, it's the relationship that you have with the bank, that they understand your business. You need to know your business really well so then you can sell it to whoever you're working with. Explaining what you do, why you're the best at it, why you're going to be successful, who you are. Those are all the important pieces that your lender needs to know. We can look at financials all day, but really being able to tell the story of your business to our underwriters, to the bank as a whole, that's the job of the lender. Is yes, the financials, yes, this, and here's the story, and here's why we want to be a part of this person's, business journey. So this is a factor that's considered. There's a reason it's the third factor, is we want to see that the cash flow and the collateral are strong first. So don't feel like this disqualifies you from any business lending, but just know it is something that is considered. So one thing is understanding your credit. So there are certain websites out there, such as Experian, which you can see here, as well as like Credit Karma is one that I use personally. I'm not paid by any of these organizations and cannot speak to their 100% validity, but it's a good way to get an idea of where your personal credit may be at. And if you can bring that up to your banker earlier in the process, especially if you think it may be a challenge, it'll help them help them refer you to the right partners. So I've had customers that we've printed out their full credit report and worked together for 6+ months to bring their score back to a place that it needed to be for them to do business lending. We've also sent them some just general information and resources on how to build your credit. So there's a lot of tools out there to help you navigate that process, and a lot of people are going to be pretty flexible and wanting to work with you to build it to a place that it needs to be. Whether you're a startup business or established will often play a factor on where your score needs to fall. But typically being anywhere from the good to exceptional range puts you in a strong position. But if you're not there yet, it still can be a worthwhile, it can still be meaningful to start the conversation with a lender. In terms of telling the story, if you're just starting to get into the good range, but you talked to me 3 months ago when we started improving on your credit, that 3 months of hard work is going to be in that story. Versus if you call me when your credit score is just starting to get in the good range, I don't have that story, and I can't share that story with our underwriters, that you're taking the time, really being a diligent borrower and working to put yourself in a place to be successful. Another factor to take in mind is, I think I see a question here. Okay. We'll get to debt to income, but I want to address questions as we kind of come along. So can everybody see the question so I don't have to read it aloud? Dan, can everybody see the chat? Do you know?
Yeah, I'm happy to read the question
I'm
to
happy to
you.
read the question. Okay, great.
Yeah, we had a question from patients. Hi, Nate. We're curious to know, for an established business, will a local bank be able to help us navigate SBA loans, especially when collateral is a challenge? There are a few other questions, but let's take them one at a time.
Okay, so that is definitely something. I wouldn't say I can't speak for every bank, but if your local bank is a preferred lender, and that's a really fancy title for it, it just means that they do SBA loans. The SBA has authorized them to do SBA loans and manage them in-house. Then yes, they should be able to help you with that. We can talk more specifics, but that is the whole job of the banker, is to be able to help you navigate the process of an SBA loan and identify that there's a need. And
With that
then
SBA loan, can that go towards purchasing real estate for office space to serve as
yes,
collateral backing for a business?
so there are SBA loans that can be used for purchasing real estate. Often when you purchase real estate, there isn't always a need to use SBA because the real estate can be served as collateral. So sometimes you can do a more traditional loan. But if you're buying real estate and potentially another business, there's a program called the SBA 504, which has some additional fees, but can sometimes help if you don't have a full 20% down payment. So yes, an SBA can go towards that. It isn't necessarily always needed. So just discussing the project and where you're wanting to go as a business, and then letting the banker and score help kind of navigate to you on what type of loan makes the most sense.
And for business loans, does the bank look more into personal credit score of the owner, or does it look at the business credit score, and how can you boost a business credit score?
Great question. So businesses have what we call a FICO score. So that comes into play. I wouldn't say one means more than the other. Business credit score is something that's talked about a lot, but doesn't play the determining factor. It's never strong enough that you don't need a personal guarantor. So, but I will say business cash flow plays a more important factor than owner credit score. So the business's financial health is more important than the personal credit score, but the personal credit score is more important than what we call a FICO score on the business. You can boost a business credit score by, taking out business loans. I would say the bigger thing on that, and I'll kind of elaborate, is the score itself doesn't matter a lot, but positive payment history with a lender, with an institution is. So I have a customer that I just worked with. They had a bankruptcy in the past, and it hasn't dropped off their report yet, but they've improved on their personal credit, and they've improved on their business. They've had accounts with us since before the bankruptcy. There was a bankruptcy, accounts had challenges, and they've since built back at the bank. We just did a line of credit for them, and it was based off of how they've been able to recover and build back their business, and they have that established relationship on the deposit side and now on the loan side. I anticipate that we'll be over doubling the amount of the line of credit within 6 months. So I think we're going to be going from, potentially like 100,000 to 200,000 within 6 months. But it's, again, the credit score on the business isn't really changing drastically, but it's showing that they're not maxing out the line, day one of the loan, and that they're managing that appropriately. So if you think you're going to have some bigger projects that, may be higher risk, the sooner you start the conversation, sooner you can start building a relationship, the better it is for you, and the better it is for the bank, because they can tell your story better. It's like anything in any sort of relationship. If I meet you day one and within a week we're trying to do something, I'm going to, be using the best knowledge that I have of you and your business to sell that story. If it's someone that I've known and talked to on occasion for 3 months, that's going to look different. So hope that answers your question, Patience. And if you're My email's at the end, so if you ever have any more specific questions, let me know.
I think that was a great
Uh,
answer, and I think it really highlights that need for the relationship and developing a relationship. And it kind of points back to what you were saying earlier, where you can do a lot of research online and get a lot of good answers, but it's not really as black and white as this number or that number.
Exactly. On the mortgage side, you could take this formula for debt to income and figure out close to what you're going to pre-qualify for on the personal side. Um, and almost every bank, almost every lender, it's going to be pretty similar. It's very different on the business side. So yeah, debt to income ratio is another thing to keep in mind. We do it for the business, but we'll also look at it for the guarantor or the owner of the business. And the whole goal of this ratio is to just make sure that you're not overextending yourself. The last thing I want to have for a business owner is they're not able to make a rent payment or a mortgage payment on their personal side because they're bleeding too much into the business. So that's another one of those things that I'd rather have the hard conversation up front than a year, 6 months into the loan, and we're already in the situation. It's a lot easier to have it proactively. So this is another formula to keep in mind, but I don't think I've ever asked for someone, what is your debt to income ratio in a meeting? It's something that we can figure out together. But as you're trying to look at yourself and look at your business, this is something that you can use to understand your financials a little bit better. So we talked a little bit about your credit score, your debt to income ratio. That's all a part of your personal guarantee. Most banks will collect a personal financial statement. I would say 50% of the time I meet with the owner and go through it because if you've never done one before, it's not the most straightforward document. So don't be hesitant to feel that you need to figure everything out on your own. You can call, I'm sure there's score mentors that'll go through it with you, but a lot of your lenders will as well. Um, they know that it's something that you don't do every day, so they want to be able to help you be successful. So don't be afraid to ask questions when you're going through the process. It shows that you're engaged. It doesn't show that you're not knowledgeable. Like that's the gist of the presentation I had. I kind of want to open it up to, I'm checking the time here. We still have time, so I'd love to open it up to questions and discussion. I'm happy to talk about examples with you about certain projects if you're looking for that as well. I think that can be tangible. But I really appreciate you guys' time.
Yeah, thank you for presenting. If anyone would like to ask any questions, you can either unmute yourself or use the Q&A window. It's your choice. I think one thing that definitely stood out to me is, you kind of hit the nail on the head there in the last question, was the depth of that relationship and how much that can matter, and how much that personal connection can help overcome those what's essentially a risk for the bank.
Yeah, I think one that's a really great example was a pretty large restaurant that's opened in Portland. And there was a high lack of fallback in terms of personal assets. So in terms of looking, I mean, credit score was in the 700s, but other than that, there weren't a lot of personal assets. Everything had gone into the business. They had been self-employed, you know, as a food cart. Before some seasonality, some, miscellaneous income. So there wasn't a lot to support the request. But we got to know each other over a 6 month period of time as they were looking at different locations to move their business into. As we got to know each other better, I got to understand that, staffing wasn't going to be a challenge for them. They knew almost everybody in that hospitality industry in Portland and would be able to leverage those connections. And sure enough, they've opened and they're fully staffed, probably more than a lot of established businesses, and they're staffed with people that have been in the industry for a long period of time that were thrilled for this person to open a business. So that was something that came into play is, okay, are they going to be able to find staff? Well, be getting to know them as a person could share all the different places they'd worked, the relationships they had, and really leveraged their knowledge of the industry as well as, the people around them to be successful. And that's one example. But if they came to me, without all of that information, we would have been talking about business plan projections, and we may not have even gotten to talk about their full breadth of experience or connections, because it's not something that came up right up at top of mind for either of us to really explore. But as we met over coffee or lunch, I swear everywhere we went, he knew like half the people that were working there. So just that non-verbal confirmation really made a big difference in the loan application.
That's definitely not something that you would expect or even like consider to be like something that you would put in your business plan, for example, to bring to the table for a bank loan discussion. One of the other things that you touched on that I thought is a really good point, and you might have an example to kind of flesh out a little bit, is how the SB a lot of times people hear about SBA loans and they're like, oh, that's exactly what I need. And you'd mentioned that they're not always a great fit. Could you maybe give an example in an instance where that's the case?
Yeah. So the instance where it was a case was a business that had been around for, 10 plus years, and an auto repair type business, and they were looking to buy equipment and a couple new trucks. So a lot of the times that SBA guarantee is used when there isn't collateral to support the loan. They were looking to make a pretty substantial down payment on the vehicles, but they were new trucks. We were willing to go up to 90% of the purchase price. So they would only have to be bringing 10% down plus taxes and anything that they would have to cover on the vehicle side. We could turn those types of loans around within a couple weeks. They wanted to engage the SBA, which requires additional documentation, additional forms. We would want to see proof of insurance, where because of the loan amount, we weren't going to require proof of insurance to just do the loan traditionally. So in that instance, I was trying to recommend to them, you're not a startup, the financial support the purchase. We have collateral because you're buying vehicles. You're not buying something that we couldn't look at for potential fallback. But they were so set that the SBA was the right tool, and I didn't feel comfortable recommending something that, I kept trying to reiterate that wasn't necessary, and that they could work with us in a traditional sense, and it would be a faster turnaround time for them. And it just wasn't something they were interested in. They were really set that they knew what they needed. And I think they maybe did get an SBA loan somewhere else. So that's okay. And the SBA wasn't hindering their process. And I'm saying it slows it down a little bit. It still can be a really incredible tool for people when it's necessary. But if it's not necessary, it's like flood insurance. If you don't live anywhere that could be impacted by a flood, you don't necessarily need that extra assurance. That's not saying flood insurance is a bad thing, but if you don't need it, you don't need it.
No, I think that perfectly makes sense. One shoe size does not fit all. And that's a good example in that instance. And I think it goes back to highlighting that relationship, right? You want to have a relationship with someone who you can trust, and we'll make sure that they're not just recommending, something that's going to be good for them, but recommending something that's going to be good for you.
Exactly.
Well, I don't see any other questions that we have. We can give it another minute to see if any roll in, but I want to say thank you, Nate, for presenting to us today and highlighting this topic. I really do appreciate that, and I think it was pretty insightful into, especially I think the point on online research was a really good one. You don't want to always just kind of trust what you see online, and we're at a point in our culture where that's pretty common.
Yeah, and I completely understand why people opt to do that. There's a sense of when you go into something, whether it's a bank or now I know when I go to the DMV or even sometimes call it my insurance guy, you have this expectation that you need to know everything and know all the lingo to be able to talk with them. But in reality, we're just people, and this is just the space that I spend time in professionally. So if I say something that doesn't make sense to you, that's on me. That's on your banker. and don't feel afraid to say that you don't understand. It shows that you're engaged rather than just nodding along and pretending that you do know things.
Thank you so much, Nate, and thank you everyone for joining us today. We will be sending out a follow-up email that will have Nate's email address and the slide deck for today's presentation. And have a good day.
Thank you guys. Thanks, Dan.